The thing that's on everyone's minds at the moment is obviously interest rates. We've never been here before. Historically low rates with the prospect that they're going to go even lower. It creates some opportunities, but it's also putting a number of problems in front of people. As rates go down and investors chase yield in other areas, we're seeing share prices, property prices and bond market prices continue to grow. And those valuations will potentially hold, but are unsustainable when interest rates go back to anything like normal. The question obviously is when will that happen? The second problem from an investor point of view is, with rates where they are, even given very modest inflation, investors are today eating into their capital to maintain their standard of living and their lifestyle. And at some point they need to shift from a very conservative basis, which a lot of investors have been seeking post the financial crisis, and they need to focus on where else they can generate a return and get some yield. So the question really is, where do I go from here? An area that a lot of investors haven't focused on has been investing offshore. The currency at $1.08, then in the low 90s, the low 80s, and we're now in the mid to high 70s, presents an opportunity as opposed to a risk. Investors typically are concerned about going offshore because currency volatility is seen as a problem for them. But what I do know is that interest rates in the US will likely increase, whereas here they're likely to decrease, and that timing mismatch is going to put further pressure on the currency. So seeing an Australian dollar down at 70 cents, or indeed even back in the 60s, is something that is quite likely in the years ahead. When will that change? When will that balance up? We don't know, but the odds are very much in the favour of the dollar being down. So being offshore and choosing markets outside of Australia presents an opportunity to take advantage of that currency shift. It does strike me as a little bit odd that the region that has the greatest growth prospects and is the best performing region, which is Asia, is actually the cheapest market. Yet markets that we all know have a lot of problems to work through, such as Europe, are more expensive. Investors talk a lot about Asia. We all understand it. We know where it is. But getting people to put their money offshore and to look for investment opportunities is something that, for some reason, investors find very difficult. It's a lack of knowledge and a lack of familiarity. The US is also one of the strongest performing economies. And while the information that's coming out of there is not perfect, it's very good. Strong employment, strong consumer growth. Again, it's a more expensive market, but it's a market that I think merits some attention. The last area that's worth mentioning is, given where rates are and term deposit rates continue to fall, if you are investing in Australia, what are the opportunities you look for? And the areas that we're seeing a lot of interest emerging in are particularly around commercial property, which does provide quite attractive yields, particularly given where interest rates are, and specific investment opportunities that might expose you to equity markets, but provide you with some protection if you're looking to buffer some of that volatility. And those are areas that are strongly emerging from the investors that we speak to.